Welcome to K-Market Inside. Today, we will break down the Korean market's microstructure and dynamic chains to provide a 24-hour Bayesian probability scenario. Before we dive into the data, it is crucial to note the current anomaly in the K-market. We are seeing a distinct decoupling from global macro noise. The market has entered a micro-driven regime, fueled by structural growth in the AI value chain and powerful governance reform momentum, also known as the Value Up program. Looking at the market regime and flow dynamics, the KOSPI surged 3.26% yesterday, closing at 8,471 points. This robust rally occurred despite significant passive selling from foreign investors. What we are witnessing is a structural shift where smart money, specifically domestic institutions and pension funds, is aggressively absorbing foreign outflows, front-running the undeniable valuation merits of our top-tier equities. Let's examine the top three dynamic chains driving today's session. Chain A is earnings fundamentals. Micron's 12% surge in after-hours trading confirms the turnaround in both HBM and legacy memory, acting as the strongest catalyst for the K-market's upward decoupling. Chain B is governance. The 45.4 trillion won ADR listing for SK Hynix and Samsung Electronics' potential 90 trillion won share buyback are triggering explosive inflows of long-only institutional capital. Chain C is FX risk. The elevated USD/KRW exchange rate at 1,542 remains a strict boundary condition, potentially capping intraday upside through mechanical foreign passive selling.
Moving to trigger events and the information cascade. Micron's guidance was striking, an impressive 84.9% gross margin, and an explicit admission that they can only meet 50 to 60% of customer demand. This guarantees solid pricing power for Korea's semiconductor giants.
Furthermore, this explosive demand is cascading beyond data centers into edge AI, with autonomous driving requiring 5 times more memory and humanoid robots requiring 10 times more. We are seeing a powerful secondary momentum forming for the Korean tech hardware value chain.
Stripping away global macro noise per the efficient market hypothesis, our bull scenario stands at a 65% probability. If the USD KRW dips below 1540 and foreign investors pivot to net buying, we expect a strong gap up of 1.5% to 2.2%, stabilizing after 9:30 a.m. KST. The base scenario, characterized by an institutional and foreign tug-of-war due to FX burdens, holds a 25% probability, while the bear scenario sits at just 10%. Finally, our actionable plan for global institutional investors. Portfolio allocation. We recommend an overweight position in large-cap semiconductors, the HBM supply chain, and the biosector. Maintain an underweight stance on domestic consumption and traditional chemicals and steel. Entry timing. Strictly avoid FOMO-driven chasing at the open. The optimal tactic is buying on the dip between 9:30 and 10 a.m. KST, only after confirming the foreign futures basis. Risk management. Given the high exchange rate of 1,542 and the risk of KOSPI 200 index concentration rules limiting foreign futures trading, we advise holding a 20% cash position and considering a 15% inverse or put option hedge if foreign future selling persists. That concludes today's briefing. We hope these data-driven, probabilistic strategies help you generate successful alpha in the Korean market. If you have any questions or require bespoke analysis, please leave a comment below. Thank you for joining K-Market Inside.